Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Welcome to the podcast Become Sensible, where we discuss about practical financial tips to help you make better financial decisions for your business and also grow your business. So I'm your host, Fiona. I am a CPA and also a small business financial advisor. Today, we talk about the world of financial forecasting, the tool that help you to look forward into your business financial situation. So, what actually is financial forecasting? If you look at my previous episode, normally like you start a business or like in the business every single month, every quarter, every year, every half of the year, if you launch a new product as a service into the market, you need to look at on the top is the strategy. After strategy is your financial planning, what is your budget, how you will allocate it, your futures resource, finance, and money, and then all of your human resource and other capacity to do in that product and service in that quarter, that period of time on the new launch product and service to the market. And then after that, every single month, every single week, when you have a day-to-day transaction going on, that is where your bookkeeping coming in to like record the transaction, reconcile the bank, and then from there you analyze your number and then do the forecasting compared to the budgets and then do the forecasting and adjust your strategy for the next quarters or next months. So that is normally the full cycle of financial management. And this is where the financial forecast coming in. And I think that is a very important thing to consider because like financial forecast is help you to look into the future of your business financial situation. And I mean, like, it's always great to look backward in terms of tracking the transaction and what happened, track compared to your target and your business financial goal. But without actually look at into the futures with the financial forecast, it's like you miss a huge thing in terms of financial management, and especially in this economy, like with so many things is changing in the macro economy, and without it, you might face some financial challenge in terms of your business. So, what exactly financial forecast? Financial forecasting is the process that you estimating your business financial in the future. It's like being the weather forecast, but instead of forecast about rain, sunshine, and we predict about financial situation for your business. And the fact that we never can forecast 100% correctly into the future because we don't know all the things into the future. There's so much uncertainty into the future. But basically, normally you can have the forecast that you have 85% or 90% or 95% confidence into the number that you put it out. And thus, if you look at into the stock markets every single month, every single quarters, when the public companies like they report their earnings, they normally also adjust their forecasting based on the recent like earning report and how it will look like in the future. And that is what it is you do in your business. Even you have a smaller side, but financial forecast is how you look into the future and adjust based on the markets, based on the macro economy, based on your customer and also your strategy. That is why it's help you to make the financial decision so much better for your business situation. So let's break down what is the key components of financial forecasting. Number one is sales forecast. Sales forecast is basically like what will influence into your revenue. It can be based on the historical data from market trend analysis from your growth plan. What is your strategy into the markets like whether that is you launch new offerings, new products, or what is your marketing strategy that will help you to like move forward with the next quarter or next month. So those things is go together, help you to analyze your sale and help you forecast in terms of like sale. The next one is forecasting about your spend. In previous episode, we talked about spend, including the fixed spend like rent, utilities, your administrative costs, and then like some variable spend like direct costs, direct labor, direct material costs that can change based on the markets and other factor. So put it in together to like look at how it's look like in terms of spend forecasting. And then the next one is cash flow forecasting. And as you know, cash flow is one of the most important thing that you need to look at as small business owner. Cash flow is the cash in the bank that help you to like sustain for the next 5 years without like anything impact. And so look at in the cash flow projection and forecasting often as much as you can. Like normally for me, like I would do that like every single week to look at in terms of like, okay, what is the situation and what we need to do. It's not because like we just survive for a week, but this is a very good habit. I remember years ago when I worked for a company that had their revenue around $22 million, their cash flow forecasting actually happened every single day. The controller, every single day he came to the office, the first thing he would do is do the cash flow forecasting every single day. And that is 22 million revenue company. That is the very good habit to be on track with. The next one is projected income statement. This is where you predict your profitability, your total revenue, your total expense line by line, and then the net profits is over the periods. And then finally is projected balance sheet. This gives you a snapshot about your business financial position at the future day. The most popular forecast is forecast profit and loss because it's like including your revenue and your expense. And it is very good. Like two forecasting that we always do is profit and loss forecasting and the cash flow forecasting. So here's the step that you can use to help you to do financial forecasting. Ideally, is normally you as a fractional CFO, your controller, your accounting people would do these things for you. But if they don't do it, here's a couple like simple steps that I can give you to help you to take care of that part. Number one is start with your historical data. It can be like your profit and loss for the last month or for year to date, for the last 6 months, 7 months, and identify the trend that is happening in your business. Is it your sale in certain product or service is not doing well, or is it doing well? But what is the reason? Is this there's something is changing in customer behavior or client behavior that you need to notice? That is very important to look at in, and this is why the bookkeeping part is very important too, because it's without correct financial data that enter into your accounting software and system, it's very hard for you to have the right data to do the forecasting. The next one is consider external factor, and this is like the economy. Where are you playing in the economies? What industry, what category that you fall in? What is your product and offers is in what type of category? And because of that, you will understand and make some research about like what is your competitor doing on the market. Not because you will like copy your competitor, but understand the landscape of the industry and the economy that you play in is so important, especially in this economy, because every product or service it has two factors that influence in terms of how it will play on the markets. Number one is supply. Supply is how many people that offer the same product and service that you're bringing. I remember I read a book and it's talk about like in a supermarket these days, there are around like 12,000 items that is selling in the supermarkets. So anytime the consumer enter into the supermarkets, they have many options to make the decision, like a high volume, overwhelming thing that they need to make the decision why they choose certain product over the other certain product is overwhelming decision. And that is why once you understand, okay, what is the category or industry that your business is doing in that landscape and how other people play. Is this like the supply is overwhelming supply in that category or in that industry? What will you do that will attract your potential customer, your client? Very important. The other thing is influencing in terms of any product or service, that is the demand. Demands is not what you actually control at all. Demand is on the customer, potential customer, and client side, which is like whether they have enough money to spend, whether your product is in the category that they need to have discretion to like make the decisions to purchase. So is this a necessary product or service that they need for their business or their life? Like for example, like no one can live without electrics, without internet these days. For example, like that. Where you play in the mind and the ladder of offering and product offerings in their consumer or potential client mind is very important, especially in this economy where the inflation is high. And if you look at the American saving rate, we are at the lowest saving rate in the last 10 years. We are at the lowest rate in the last 10 years. That's how to illustrate how whether like customer or client would have the money to spend on certain product and service. When we understand this, it's not to be like overwhelming and scared and worry and do the wrong thing. But this is when we understand it, we have the right strategy and how you play in this whole market. That is the most important thing. The fact coming in is hard and tough sometimes, but once we look at it and we understand and we have the right strategy approach in this situation, that help your business more than just like okay, ignore the situation, ignore the fact and the information. So that is very important in terms of forecasting. We can be optimistic. Normally, like the business owner, entrepreneur are optimistic because otherwise we not start the business by ourselves at all. We would rather go to work for someone if we don't have the optimistic ability in our the way that we think and make the decision. But optimism is one thing. The other thing is we need data and other information to help us to understand the situation so much better. And from there, you make the decision. Okay, whether you will change the quantity you offer, you change the pricing, you change the thing that you put in your offer, your product, whether you will change the message in your marketing, whether you change the position in your marketing. Those things is actually absolutely important in this economy. When everyone have a lot of money to spend, the whole economy has a lot of money to spend. You don't actually compete with other things on the scale at all. It's less likely. The competition is low. But now you not only compete with the same category that you are in, but you actually compete with other thing that is on the potential of the spending of your customer, your potential client. That is how it's tough in the like the economy like this. And I am naturally an optimistic person, positive person, but I always, anything that I do, always have a back with the fact and the data that help me to like avoid the bias in our decision and that help us to like move forward in any situation that you survive, you thrive, and you sustain your business in the long term. Number four, what kind of tool that you can use for like forecasting? There's so many tools, so many software nowadays offer this, but the best that you can do is if you can, you use just spreadsheet. And I think QuickBook Online have a very good in terms of like their financial report, profit and loss. And from that profit and loss, it's very easy to create a forecasting based on it. Or like even a cash flow projection. If you listen to episode cash flow, I actually lay out how you can do it by yourself too. or if your accountant, your CPA, and your fractional CFO doesn't do it for you, you can do it yourself too, because it's a necessary tool in terms of financial decision for your business. And finally, like, you review, adjust it, change your forecast, update your forecast at least once per month. But if like you can do this more often, it's wonderful. Now we talk about like real life example. Like, I had a client, let's call her as Katie, and she run a boutique graphic design business agency, and she was like consider whether she should hire additional new designer, but wasn't sure whether you afford to do it. And so we run the financial forecast for her. We do scenario analysis to help her to see, okay, what's her revenue will look like, what is the spend will look like, and that's give her like this the decision. One of the things that we do for clients is we not make the decision for them, but we give them the scenario and understanding what will happen in certain situation, and confidence that they can make the decision on their own. And that is what we did. And after we do this analysis, they like see come back and see, okay, this is my decision, and what I will do with it. And that is one of the things in terms of financial forecasting is you need to give some different scenario that help you to understand, okay, what is the most likely situation will happen, what is unlikely, what is the worst case scenario, because we always need to have a backup plan, especially in this economy. Okay, so financial forecast is actually not a crystal ball. Is an educated scenario based on the best information that available to us. The future is sometimes like uncertainty and unpredictable all the time. So this is very crucial that you actually do the financial forecast very often and as the information coming in. So before we wrap up, here's the three key takeaways for you. Number one, financial forecasting is a vital tool for making financial decisions for your business. Number two, involve projecting in sales, spend, profit and loss, cash flow, and the balance sheets and financial position. And number three, while it's not like 100% sure, but it's regular forecasting and adjustment based on the data, financial data, and the market trend, the economy trend, and your customer. That's help your financial health. So I think that is all for the financial forecast episode today. Thank you so much for tuning in today, and I hope to have you in the future episode. Please review and leave a comment, subscribe to us. And if you have any question, please let us know. And I so appreciate for your time. Thank you so much, and I cannot wait to talk to you in the future.